Let's take a look at the SPY outlook for this week. Another Sunday night video in 5 minutes or less. We'll preview the FOMC and are we going to see a Trump pump or a dump? Let's get into it. So really quick here, just the pure TA and dealer levels. Again, like last week, we talked about this Monday and Tuesday. We said we would see but possibility for bears to do damage Monday, Tuesday, and if they didn't, we were just going to melt up as we got closer to Wednesday and Thursday, and that's exactly what happened. We had a nice pump Monday, Tuesday, and then we saw after that, we talked about 605, 610 levels potentially getting hit in Sunday's video, and as soon as we broke that 600 level, we even kind of back tested it intraday on Tuesday, as you can see right here, a little dip there in the morning, and we just closed decisively above it and the trend line, and then just pretty much a gap and go the last 2 days, or the next 2 days prior. And on Friday, we also talked about 610 being max move. That's where we closed below that. So, but this week, it is very similar. We could see a little dip possibly into 600. And of course, we have the FOMC, and it's all going to come down to, is Trump going to pump? I think he's going to... Yeah, I think he's going to bully the Fed. I think he's going to bully Powell. He's already kind of made that clear. And we could see, there is some VIX activity now starting to pick up. Kind of like how it was previously. It's not the same kind of setup as it was in December. We are seeing some calls bought, some OTMs, call spreads here. I don't think we're going to see a repeat of last month, though, and I think market makers are just much more positioned better for it now. A lot of people were caught off guard by this. So everyone was looking for a Santa rally. Everybody was looking for end-of-year float up. Nothing serious is going to happen here. The Fed is just going to stay out of the picture, right? So we got this big, basically 200-point dump here in a few hours. Very, very rare to see that. And of course, it didn't really lead to much. But right now, 600 is still a big dealer level on the downside. It should get tested. It's also going to coincide with this top side trend line as well. And if we look at the Qs, we have a little bit of interest around 520 as well. And you're going to see that coincides, again, with that top side trend line of this bull flag structure here. It also lines up pretty well with the 382 retrace. If we start to break below that, and we'll have to check the dealer levels throughout the week, and I'll be doing that as I do every single day. But if we start to get down to those levels, are they starting to put interest below that? Are they starting to hedge below that? And can sellers break the 520? Can they break the 600? If that's the case, then we could see lower prices later in the week. But right now, the downside that I can see going into FOMC at this point is just to 600 right now. We do have earnings. We're going to have Apple, Meta, Tesla, I believe Google as well. So big players are reporting this week, and that's in addition to the FOMC. We also have PCE Thursday morning, although Powell will have all that information, I'm sure, for his FOMC presser preview. But either way, look for 600 here, and past that, again, 13, 15 on SPY are some big levels. Qs do look a little bit softer right now. There's a little bit less upside priced in. It's really just 535, and there's just a ton of call resistance at 540 right now. So, this double top is pretty stiff. Even the diamond here, Dow 450, that's going to be a pretty stiff level. A stock that we really need to watch, obviously, still is Apple. We told you to watch 220. That did end up being a buy, at least for a short-term bounce. We did make a little bit of money in the trading room off of this. Not as much as I would have liked. I think 230 is still kind of max move right now. Maybe 235 if it really gets going. I personally would love to see a bounce up and then kind of a dip down to 210. I think there's some levels down here that are attractive. Dip buys 210 and maybe even 200 on some overshoot down. That would likely take you below SPY 600 though, depending on where we're at that time. But I am watching Apple here, and at post earnings, I think, especially if it dips, it could be an attractive area. Those could be attractive levels to pick it up at. But that's what we're watching here this week. Obviously, there's a few other stocks, but Apple is obviously the big one. That's the key. But just watch 600 here going into Wednesday, and we'll have to see if sellers can break that. If they can't, we could see hedges come off in a big way, and we could see another kind of continuation leg to the upside. Anyways, you guys take care. Don't forget to like the video. Come find me on carnivoretrades.com. I'll see you guys all on Monday.